First, we start off with a record-breaking week for Wall Street. The S&P 500 surging to all-time highs this week. Stocks closing out their third weeks of gains, with the S&P 500 on track for its best first half of the year since 1997, up 18%. Check out some of the biggest winners. Netflix up a whopping 9%, Boeing up 7%, Oracle up 5%, Exxon up 4%. So, with stocks at record highs and the S&P 500 surging 2% this week, Guy Adami,
yes.
Would you trade or fade this market?
Trade it or fade it. Top of the show on a Friday. Well, got to be consistent, Mel, and I will say fade it now. That's clearly been wrong now for weeks, if not longer. But I will say fade it as we go into our next week. G20, I think, will be a non-event, which is negative. FedEx earnings next week, I think, will be negative, which is market negative. And the fact that the VIX is at these levels rallied today, 15 or so has been a level where the market has historically sold off from over the last year or so. All those things being equal, on top of which the run has been magnificent, too much too fast, I say fade it in the next week.
You're trading it.
I would trade it. I mean, I can't think of a scenario that you would fade this rally.
Really?
I can't come up with one.
Not one single scenario.
What if nothing happens at G20? I mean, don't you think that's a risk?
I don't know. The Fed is still there waiting in the wings with 3 cuts. Keep going. I like this game. It's
okay.
Well,
I mean,
it's a better game.
Okay. So let's say inflation increases. Let's say the Fed can't be there anymore, and there's no trade deal.
Inflation increases.
Yeah. Because
that
of
would be great
tariffs.
because
of tariffs.
There is zero chance inflation increases. Everyone
zero chance.
Split them up.
Zero chance that inflation
increases. The Fed can't find it. Powell can't find it.
So then why are they our backstop then? If they can't increase inflation, that means that there's no reason for anybody to invest. So then why would you be bullish?
Because he's going to continue cutting rates until he finds a sniff.
Just like Japan
inflation.
did. And then their stocks went straight down.
So, I don't know. You've been negative on the S&P. I've been positive on the S&P.
I've been negative for like a week.
I'm not making it mano-y-mano.
It sounds like it.
The point is, the more he is the backstop, which he is right now, the more the market rallies. We're off of 27.22. Up to the levels now, new highs and going high.
Maybe. So I will say, I was very surprised that the market rallied off of Powell. I thought that was mostly priced in. That is definitely something that I got wrong. My biggest concern is we have priced in, again, a lot of stuff. I don't think anything happens at the G20, so I'm a fader of this market.
So I'm going to drive it down the fairway with Steve as the woods on the side and BK as the pond over here. And by the way, it doesn't imply that either of them are wrong. I'm just saying they're on different sides.
Does this mean that you're trading or fading it?
Oh, sorry. I'm going to trade it. I'm going to trade it. But so I'm obviously closer to the woods than the pond. But my view is that I don't think you can be wildly anything at this point other than needing the Fed to have basically done more than they could have 2 days ago. You need a sideways action in terms of the trade dynamic, and you need the equity market to essentially be trading as a function of an inverse of the bond market. So 197 is a low yesterday. You had bonds actually trade higher. The good news for the market, so my slightly bullish call here, and again, structurally cautious, tactically optimistic in the short run. Look at the dollar. Dollar is down 0.5% today and is now solidly below the 200-day for really the first time in about a year. That's right. For all this talk about the dollar and what it might do, it finally gave up the ghost over the last couple days. But decidedly today, that's a very bullish dynamic for risk assets, whether that be commodities, whether that be cyclicals, whether that be emerging markets. You should like that.
I mean, not that I play trade it or fade it, nor will I say trade it or fade.
Sounds like she wants to, guys.
But it seems like it could be a pretty treacherous time for stocks in that you mentioned FedEx reporting earnings next week. Some people might say that FedEx at this point is idiosyncratic, that it's a story in and of itself and not necessarily a bellwether for the economy.
I think that's fair.
But there are plenty of other earnings coming down the pike afterwards.
I mentioned
and what
FedEx.
happens at second quarter? They give the outlook for the rest of the year. What are they going to say? Are they going to say, oh, yeah, everything's going to be fine? I mean, some of them will.
Of course not.
But if you get this free pass, why wouldn't you take it?
Well, so I don't want you to cut you off. All right, so Guy was talking about FedEx, but I would make an argument that we've heard from FedEx for now 2 quarters that they're running into headwinds. And some of it was, I wouldn't call it operational, but I think they were having some execution issues. There was some tightness, there were some bottlenecks. They've also been talking about some of the costs on shipping. Look, FedEx, this is well in the price as far as I'm concerned. FedEx is at kind of a trough valuation. FedEx is trading like we have a recession. It's trading that 197 on the 10-year means you're going into recession, not Steve's, hey, there's no inflation, and that's why rates have gone lower.
I mentioned FedEx in the context of earnings are coming up, and that's what I think the market should be focused on, and I think they'll be disappointing, which is why I started the show by saying
fade it.
Nice way to sort of
I remember.
put a bow on it.
Put the bow on it.
Squaring the
We're
circle.
going to go to individual names now, though, in this game. We mentioned Netflix up 9% on the week. So, Grasso, are you trading it or fading it?
So I'd still be trading this one. It's up 37% year to date. I don't think it's a zero-sum game. I don't think it's either Netflix or Disney. I think that it's Netflix first, then it's Disney, and they're going to make it tougher for anyone else to enter that streaming war, that streaming arena. But I still think you trade this, especially if the market continues to go higher, which I do believe is so.
So I'm going to take a page from Tim's book and use this tactical, strategical thing.
Best-selling novel.
Yeah, the pond and different things. But I would fade it here only because it's up 9%. I actually think Netflix does quite well. To Steve's point, I don't think it's a zero-sum game. I think Netflix is one of those subscriptions you cancel last. But it's also been trading in a nice little range here. So take a little off the table and let it prove it to you.
Although I am bearish, as I mentioned, on the faded for the overall market, I would agree with Stephen and with Brian Kelly that you traded. I think it's a push towards the May high of, what is it? I think last year, 420 or thereabouts. And I think we do that into their July earnings release, Melissa.
Right. Boeing up 7%. Tim?
Yeah, I think you trade this one. We had some good news this week in terms of new orders coming out of the UK, et cetera, et cetera. This is a company that, to me, first of all, I think it's cyclical minus, and I think it's industrial plus. What I mean by that is, yes, you could say this is the ultimate stock that could fall victim to slower economic growth around the world. This has been a story that's really been all about Boeing itself. We're not removing the headline risk. We're not removing the tragedies that happened. But this is a company that, in terms of execution and all other parts of their game, is extraordinary. This was important for week. It was important technically. It was important for their core business. And I don't think, based upon the order cycle and the demand there for one of only two global players that do what they do, that this is a stock that should be falling victim to a trade war in the short run.
This is a faded for me, and it's running into technical resistance. 379 is the 100-day moving average. So I would think that if you want to trade it, you have to wait till it busts through that resistance level. Right now, it's a no-touch, fade it.
That faded graphic is so jarring.
It really is.
It's very loud.
It's
like
sound, yeah.
What would you say?
Disturbing.
So, at the risk of having another jarring sound, I will fade this one as well. I think in the longer run, Boeing does all right, but we've had a tremendous run here on the way up. And so, again, the pool and the pond thing, put this one in the pond.
Oracle, near all-time highs of 5% after earnings, Guy.
Yeah, it's interesting, and I'm gonna get jarred on this one and say fade it. I actually started.
It's better when you brace yourself.
You look scared.
Do I look scared?
Oh, yeah.
Well, you should be with Oracle because, the stock didn't really trade all that well post-earnings. It's got to, things that make you go, remember that song? BK?
I do, yeah.
I think that was P. Diddy, and he said things that make you
Is that
go,
what it was? Or was it Sean Combs?
P. Diddy?
Who was it?
It wasn't P. Diddy.
Well, it was somebody, and he said that.
Why would I know
exactly,
anyway?
But this made me go
CNBC
home
Music
today.
Factory.
I thought it was
That's
CNBC Music Factory, exactly.
Yes, CNBC
I
Music
thought the
Factory.
earnings were good. I thought, given valuation, it should have traded higher, and it didn't today. That concerns me, so I say fade it without the jar.
So I'm tired of that noise, and therefore I'm going to trade this one. And I trade it for the following reason. We actually just got out of those numbers. Basically, their core annuity stream is basically growing at 15% in terms of the software subscriptions. The valuation is hardly assuming for Oracle based upon its 5-year history. I realize maybe this is an environment where we don't care about valuations, but relative to the peer group, I really do. And I think relative value is important at a time when people may be looking at the growth in the software sector and Salesforce and saying, I'd rather own Oracle.
I'm sorry. So this one, I would trade this one as well. I think it's playing catch up here with SAP, and they're both outperforming Salesforce. As Tim just said, Salesforce is up 13% year to date. So I think Oracle still makes up some ground with SAP, even though they're not exactly comps.
Last but not least, ExxonMobil, BK.
Yeah, for me, here comes the jar. I am going to fade this one. So I'm still playing oil as this is a bear market rally. What's gone on here? We've had a bit of a lift from some geopolitical tension. I don't think there's really a reason for either side in this conflict in the Middle East to go to anything further. There is the chance we have like a tactical miscalculation. But for me, you fade the ExxonMobil because I think oil goes lower.
You liked this one yesterday. You just mentioned
look
this
at you.
yesterday.
That's so I
do
can't
listen
believe
to
you
you
paid-
on
It's like the
occasion.
only
You make it
time
seem
you
like she
listen.
can't remember day-over-day facts,
It's not
man.
that she can't
she's a
remember.
I
smart
blocked
girl.
him out.
She tunes me out. It's like, remember in the old VHS, and you don't even mess with
The
those
survival
dials?
mechanism.
VHS? What are you
But
talking
anyway.
On the TV when we were
Please.
kids.
ExxonMobil.
Trade it.
VHS.
And I said last night, I
Please.
said
ExxonMobil?
last night, for the first time in at least a year and a half, ExxonMobil has stopped making lower lows and lower highs. And valuation is compelling. I think oil actually does go higher. On a benign market, I think this stock trades back up to 83. So I say trade it, Melissa.